What is going on, you guys, and welcome back to another video. If you're new here, my name is Brandon. We post a video every week, so make sure you subscribe and hit the bell for notifications. And if you're a beginner investor that is interested in learning more about investing in the stock market, well, quick plug here, guys, our new course is actually live. We have students going through the course as we speak, and until the end of the month, we are having a launch sale on that course, guys. It's 25% off the course. You can use the coupon code LAUNCHPROMO or simply click that first link down in the description below, guys. Also, do keep in mind, guys, that as part of enrolling, you do get a lifetime subscription into our private stock market membership group. That's included in the course purchase. You get to see my personal portfolio. You get instant email updates when I go out and place trades in my own account. If that sounds interesting to you guys, go check it out. You can check out some of the testimonials that have come in from our beta launch. I do apologize there for the quick little plug, something I'm super excited about, guys. I know that it's a little bit on the pricey side, but it really is the one and only course that you'll ever have to take if you're new and you're looking to get started with investing. But getting right on into today's video, guys, the first stock is one that you've probably never heard about before. It's a company called New Flyer Industries. The ticker is NFI. And NFI Group, that's what we consider the parent company. Again, you're probably not going to recognize any of the names up on the screen here, but these are major manufacturers of buses, okay? Heavy duty buses. They make major transportation vehicles. Take these single-decker, double-decker buses, for example, as well as motor coaches. They actually have over 105,000 buses and coaches currently in service around the world. And as stated here, just reading from their annual report, management estimates that in 2018, New Flyer had approximately 43% market share of the combined US and Canada. So basically 43% of the market share in North America of heavy duty transit bus deliveries. As well, if we look down just a little bit here, about a 45% market share of deliveries via motor coaches in North America. In other words, guys, we're talking here a major player in this industry. And as we see by taking a look at the share price here, guys, the share price has fallen by late April about 40%. It's currently trading for around $35 per share Canadian. And at these levels, guys, you're getting a starting yield of 5.37%, which is just awesome. Now, why do I think that this is a good stock to buy in August? Well, on top of owning a major market share here in the bus manufacturing space, like a 45% market share there, that is very powerful in and of itself. But an aspect of this business that to me is very important is what's called the aftermarket services or the aftermarket parts. And it does actually really remind me of another company that we talk about on the channel here a lot, favorite here on the channel, in United Technologies, the company that makes airplane parts. They make these big engines, Otis elevators as well. And keep in mind, guys, that we of course have the upfront sale of the elevator or a bus or whatever we're talking about here. But these major pieces of machinery, the buses, these elevators, these engines, they require maintenance going forward. From time to time, they require new parts. The contracts that these companies have in terms of just providing that general upkeep, those contracts provide this company with a lot of recurring revenue. So you got the upfront sale, but for years and years down the road, they're going to be the ones supplying the repairs. They're going to be the ones making the fixes. And that really does diversify their business model in terms of having the upfront cost plus the recurring revenue, which is a major benefit in my opinion. Now, as you can probably tell, the company has been going through a bit of a rough patch. It kind of started, I believe it was a couple earnings ago, or maybe even 3 earnings ago, when they missed their revenue numbers, they missed their income numbers, they weren't up to those targets. But as I always like to remind you guys on this channel, we're here focused on the long-term prospects of a company. We're out trying to identify good businesses. Take New Flyer as a good example. And you don't want to just discredit a company for a couple bad earnings reports. In fact, in my opinion, what that does is it actually represents an opportunity for us to go in and buy these stocks at a lower price. We're basically getting a 40% discount on a very powerful company here that has a major grasp on its particular industry. Again, that recurring revenue is something that I personally really like. So it is a bit of a smaller company that, again, a lot of you guys probably have never heard about, but in my opinion, this is a great stock to buy in August. Stellar time to take advantage of that discount. The stock currently trades for $31 Canadian. It pays a 5.37% dividend, and New Flyer Industries is the first stock to buy in August. Now, jumping right into the second stock for today's video, it's the company Restaurant Brands. The ticker here is QSR. And this is the company that owns Burger King, they own Tim Hortons, and they own Popeyes Louisiana Chicken, or Popeyes Louisiana Kitchen. These are some of my favorite restaurants out there, guys. We don't actually have Popeyes here in Vancouver, but whenever I get the chance, I usually go out and get some when I'm visiting a city. I think I like those buttermilk biscuits or whatever they're called. And just for a fun fact here, guys, this is actually the third largest fast food chain company in the world. I believe behind the likes of McDonald's, I believe maybe Starbucks, something along the lines of that. And I'll first of all start by saying, I personally love to invest in the fast food industry. If I look at my portfolio, I do have a decent number of holdings in this space. I think that for the most part, it's an industry like pretty much year round. People are going to be going out and buying fast food, whether it's healthy for them or not. That's unfortunately just the reality of it. And you actually will come across people who do make the argument that if a recession comes around, we're late in the cycle. That's something that everybody's talking about here online. If a recession does come around, you definitely could make the case that people in general are going to be a little less likely to go out for like a luxurious dinner. Maybe they'll skip out on that keg dinner or, Red Lobster or whatever it is, kind of like a higher up tier of food. And maybe they'll just grab a Whopper on the way home, or they'll go and grab a Big Mac. Really, that sounds like something that I'd probably personally do, and I'm sure that a lot of other people out there would as well. So good company for, I guess we could call it a rough economic time. And I actually did get the chance personally a week or two ago now. I went to Timmy's and I went to go try their new Beyond Meat breakfast burger, all right? And I'll tell you guys, if you hadn't got the chance to try them yet, they're pretty darn good. Like, I'd actually go as far as saying I really enjoyed the burger, the meatless burger or whatever it is. They're good. And we're also seeing Burger King, I believe they're trying something out, something similar to that, which I think is just pretty spectacular, right? It's cool to kind of cater to that market. There's definitely a wide audience out there that do appreciate those burgers. And I know that it is kind of like a smaller thing, but just on a side note, it was delicious. And I do think that it's cool. I think that it's a cool minor thing that they've added to their business. As well, whether you do view this as a positive or not, Warren Buffett is and has been a big believer in Restaurant Brands. He holds about a $500 million stake in the company through his Berkshire Hathaway portfolio. To me, it's almost always a bonus when Buffett's out buying or investing in these businesses. But if this is a stock that does sound interesting to you guys, something I think that's worth bringing up, the growth of this company going forward is really going to be dependent on how well they expand globally. So they're currently making a pretty big push. For example, very recently opening some stores over in Thailand. Reading here, they're planning to open 40,000 locations globally over the next 8 to 10 years. I know that when I was visiting the Philippines last month, I looked up and saw Tim Hortons there. I was like, what? I was like, what the frig is that doing here? And all honesty, I didn't even bother to check it out or go in and see how busy it was. But of course, it is still a major unknown. It is a risk that this business is potentially facing on how this global expansion is ultimately going to turn out. But if you're somebody that loves your Whoppers, if you like to get yourself some fried chicken and you believe that this company can do well globally, it could be a cool one to check out. The stock pays a 2.48% dividend, which is nice. Nice little dividend there. It trades for $72 USD. The stock actually does trade on the Canadian market as well. That's actually headquartered and based out of Toronto for $94 Canadian, and Restaurant Brands is the second stock to buy in August. Now, moving on to the third and final stock for this video. Go ahead in the comments, call me crazy. It's the company Canopy Growth, ticker CGC, or in Canada here, the ticker is of course WEED. And you guys already know, you've been following my channel for a while, guys. You know my stance on marijuana stocks. I'm the guy that hates marijuana stocks. Tell you guys not to buy them, stay the hell away. Well, actually, guys, I don't hate marijuana stocks. at the time of releasing those prior videos, which I will link down in the description below for anybody interested, I just didn't want anybody getting sucked into the hype that was surrounding the marijuana industry leading up to legalization. And I'll tell you guys, if you don't remember, or if you just started investing, there was a lot of hype. It actually reminded me very similar to the whole Bitcoin craze or the cryptocurrency rush when everyone was all flooding in. You know, in almost all cases, if you ask me, whether we're talking here marijuana stocks, whether we're talking Bitcoin, when you find yourself in a situation where you're rushing in to go buy stocks, there's all this excitement. Really what does happen here, guys, a lot of the times is you end up buying near the peaks. You end up buying super high. You think the stock's going to be pushing higher. But if you take a look at how, for example, Canopy Growth has performed, or even Aurora, if you bought in past legalization, you really haven't made all that much money. In fact, you've actually probably lost money. That's what happens when you go out and chase hype sectors or hype stocks. Now, that being said, and I did mention this in the previous videos, I do believe in the long-term prospects of the pot industry. I think that, of course, going forward, more and more places should, and I think they will, legalize marijuana. We've seen that idea kind of proven here with these major investments from more established industries. Take the alcohol beverage, the tobacco industries, for example. They clearly see merit and promise in this industry, and so do I, for the long term. Now, I can't just sit up here for the credibility, the integrity of my channel and pretend like the numbers on Canopy Growth are phenomenal. In fact, they're not at all. Like, if we're talking about good businesses here, take a company like New Flyer, the video or the stock that we're highlighting in this video. To me, that is a good business. That is a business with good fundamentals, strong revenues, strong cash flow. That to me is an established overall good business, a good company to invest in based on the numbers. Now, Canopy Growth actually reminds me a lot right now of the company Tesla, okay? Tesla's another example where the numbers aren't necessarily the prettiest. Keep in mind, these companies are at completely different phases of their cycle, but with a company like Tesla or Canopy Growth, you're projecting for future growth. You're willing to pay and basically take that risk here that although it's not currently looking like a strong company, if they're able to achieve what they plan to, whether that be Tesla or Canopy Growth, it could turn out to be a very good investment for some of you guys. Now, keyword there is some of you guys. This, of course, is an investment that is only suitable for the right type of person. Obviously, this one falls much higher up on the risk scale. Actually, thinking about it, it's probably the most speculative stock that I've personally covered on this channel. But that said, I know we have a vast variety of investors on this channel of all different age groups, of all different risk tolerances. And for the right person, this could be a good option. And one thing that I personally found quite interesting about the cannabis sector in general, I don't really have any situations to share to back this up or all, but just from monitoring the space over the past little while, I've personally noticed that the cannabis sector does tend, it kind of works independently of the broader market. And feel free to leave a comment down below if you've noticed that, or if you agree or don't or disagree. But a lot of times, let's say the broader market is selling off, let's say the Dow's down 700 points, whatever it is, the cannabis market, they could be doing their own complete thing. There could be a great day in the cannabis market or vice versa. And the term that you're going to hear for that is what's called correlation. You can take that either as a positive or a negative, but it is something that I just thought was worth mentioning. And if you have been following along with the company here, the news that you've probably been hearing about was a couple weeks back now, the CEO, okay, Bruce Linton, he got the boot. He was terminated, he was fired and asked to leave the company. And on a side note, I always thought this guy looked like a bit of a hobo when he came and spoke on BNN or CNBC. And I know that at first glance, hearing that a CEO or a key executive of a company gets terminated or fired, that's usually not the greatest news. That's usually something that you don't want to hear. But in this particular circumstance, I think that it was actually the right move for Canopy Growth going forward. I think that a lot of investors actually agreed with that, because if you haven't got the chance to check out an interview that Bruce did with, I believe it was CNBC or maybe Bloomberg, I'll see if I can dig it up for you guys and link it down in the description below for anybody interested. But he himself, although of course being upset about basically getting booted out from his business, he actually tended to agree that he wasn't the right person for the job. And we do have to keep in mind, like, all credit to the guy. he did an outstanding job of building up the company and getting it to where it is today. Like, he did a great job with that so far. But it's a completely different ballgame being the CEO of a startup and then managing a publicly traded company. The company honestly grew to a size much bigger than he even really wanted to manage in terms of keeping the shareholders happy. Of course, there's the onus. They're required to report their quarterly filings, hit their targets, these Wall Street estimates. It's a whole completely different ballgame. I actually found it quite funny that he was willing to admit that he probably wasn't the right person for the job. So the fact that he got the boot there, as terrible as it sounds, in my opinion, is actually a positive for the longevity of this company going forward. And taking a look at the stock price here to wrap up this video, we have seen it kind of retracing down. It looks like I wouldn't say that I'm necessarily rushing out to go buy this stock. Of course, this is a very volatile industry. As you guys know, things could go each and every way, but it is a stock that I'll be watching in August. And if it continues to drop down, let's say below this $40 range, hey, it could turn out to be a nice time to go out and get some exposure to the marijuana sector. I'd be pretty shocked if it didn't at some point make a reversal and push to higher highs. But this is, of course, the Canadian quote that we're looking at here, guys. The ticker is WEED. This one's trading at currently $47 per share. The stock also trades on the New York Stock Exchange for any of my US viewers for $36 under the ticker CGC. But Canopy Growth is our speculative, our fun, and third stock to buy in August. So guys, those are my stock picks for the video. I know that last one is a little bit out of character here. I don't know what's going on. To be completely honest with you guys, as researching this video, I'm not personally seeing a ton of value out there in a bunch of stocks, especially my watch list of stocks that I closely monitor. I wouldn't necessarily say that there's any screaming buys at the moment. I'm happy holding my stocks, but for the vast majority of them, yeah, I'm not seeing a ton of value out there. That's just me personally. So I was, I guess, kind of reaching with that third one. But hey, it still could turn out to be a good investment. So let me know what you think of my stock picks down in the comment section below. I'd be happy to hear from you guys. If you enjoyed the video, feel free to give it a thumbs up. It really helps support the channel. I really appreciate it. Yeah, I really appreciate the thumbs up on this channel, and just leave any comments just saying hi. If you're not already subscribed, I post a video every week, so subscribe. And as a reminder, do take advantage of that discount we have going on right now, 25% off. And if you purchase it, guys, you get lifetime access into our membership group. So I know it's a bit pricey, but if you're a beginner that's looking to start out, maybe you've never started before, maybe you're already investing, but you just want some guidance, we actually go through everything in terms of setting up your account, picking your investments, going out and actually buying the stocks. It really is, in my opinion, the best source online for learning about investing. That's, of course, just coming from me, but do take advantage of that discount if that's something that interests you. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.